Hello, this is Paul Ferneyhough, Corporate Director of Finance and Investor Relations at Repsol. On November the 3rd, we presented our third quarter financial results. The adjusted net income for the company was 576 million euros, 269 million euros more than the same period in the prior year. During the third quarter of 2017, our industry experienced strengthening oil prices, combined with a weakening US dollar versus the euro. In addition, Hurricane Harvey in the Gulf of Mexico resulted in capacity disruptions across both production and refining, leaving us with higher than expected margins for part of the quarter. Repsol's Upstream division is currently producing close to 700,000 barrels of oil equivalent per day. Increased production coming from the ramp-up of new projects, additional volumes from our assets in Libya, and a normalization of production in our gas assets in Indonesia. Capital is lower than expected, but not at the expense of either production over coming years or long-term reserve replacement ratios. Our Downstream division had yet another good quarter of performance across all business lines. Cash flow generation was strong, and with all our major maintenance now completed, our refineries have returned to high levels of utilization and conversion, allowing us to benefit from the strong margins we saw through the third quarter. Now turning to strategic objectives. I'm pleased to say that our efficiencies and synergies program is on target to deliver 2.1 billion euros in cost savings, a whole 12 months ahead of our original target. In particular, the performance in the Upstream division has driven our break-even such that it dipped below $60 a barrel in the third quarter. Focusing now on capital expenditure. Continued optimization of our project costs, along with lower overall expenditure in the industry, has allowed us to reduce our forecast for the year to 3 billion euros. This has not been at the expense of current production or future production targets. In fact, looking at accumulated production to date, we're confident that this year we can raise our forecast to 685 to 690,000 barrels a day from our Upstream division. In the Downstream business, following 3 strong quarters of results, we're now on target to deliver free cash flow from that division at around 2 billion euros for the year. Now turning to cash and leverage. After a strong quarter of free cash flow generation, our net debt has fallen to 6.9 billion euros by the end of the quarter, delivering a net debt to EBITDA ratio of around 1.1. This leaves us well on target to deliver our leverage positions for the end of the year. The strength of Repsol's integrated business model, along with our strategic transformation, has delivered a business that is robust under current economic conditions. We're able to maintain our Upstream production volumes, whilst our Downstream continues to throw off significant levels of free cash flow. Repsol has delivered a very successful set of third quarter financial results. If you have any questions, please don't hesitate to contact myself or members of the Investor Relations team. Thank you.